Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of the Cannabis Business Podcast. Today we've got Katrina Glogowski, angel investor and attorney in Seattle, to talk about the 10 tips for the U.S. cannabis businesses facing an economic downturn. Katrina, thanks for being back on the podcast.
Thanks, Josh.
All right, so starting with number one, don't ignore signs of trouble. Delaying the development of a strategic plan to address financial problems can eliminate options later.
Josh, this is called a business continuity plan. Part of your due diligence is, hey, what if there is an earthquake? What if there is a horrible economic situation? What if there is a fire? What if all of a sudden our employees have to work from home for a variety of reasons? And this should be number one on your list. Heyday, life is going great. What if it's not?
You don't want to be a company that's bought back billions of dollars of your stock and then you have to reach your hand out to the government and say, I need a bailout because I didn't plan appropriately.
Agreed.
What you're seeing in the cannabis space is a lot of sale leaseback options. So whatever property, plant, and equipment they have, they're either selling those and leasing them back, trying to get some cash in their pockets. So if you haven't planned for a rainy day, don't ignore future signs of trouble. Even an exit strategy should lead you down that path to find out what you need to get out or what the signs of trouble are.
Yep.
Not all creditors are created equal, so it's tempting to ease the pressure by making payments to creditors, but without a solid plan, these payments might actually decrease bargaining leverage and waste precious cash resources. So until you develop a turnaround strategy, you can't really determine who to pay, when to pay, and how much to pay your creditors.
Josh, in the law, this is called preferential treatment. While bankruptcy is not available to cannabis businesses at this time, the legal concept still holds true. You can't decide who to pay and who not to pay. And it can get you in legal trouble if you pay your best buddy before your other creditors. And it can also get you in legal trouble with your investors if you pay one bill over another. So think about that and think about the long-term needs of the business, not what you want or what a particular creditor wants.
Number 3, don't avoid difficult phone calls. So most creditors will work it out with you if they believe that you're being transparent and honest. An experienced attorney can often assist in easing the pressure by handling creditor inquiries and engaging them to assist your turnaround.
You don't necessarily need an attorney to do this, although if you're really looking at a severe problem with your company, you should engage counsel to help you plan. But this is just common sense. Call the people and say, sorry, check's not in the mail. Do not promise something. Do not ignore people. Just be honest. You know, we're having a tough time. We have a possible deal. Can you give me a week? Can you give me 30 days? Especially in times of widespread economic difficulty, the company, the creditor that you're dealing with is also having a hard time. So just be honest and be proactive about it. Head in the sand is not going to help you in this situation.
Yes. Number 4, engage your accountant. That's assuming you have one. So accountants often see financial problems before their clients do, and they can identify cost-saving strategies. Moreover, if your broader plan involves creditors agreeing to reduced amounts owed, an accountant will need to review the tax implications, as so-called cancellation of debt can be considered income for tax purposes and negate the benefits of a release of debt. There are, however, exceptions to the rule that your accountant can evaluate. So yeah, get somebody who knows about finances and tax.
Josh, we talk about this all the time. If you do not have a financial professional on your team, you shouldn't be in business.
And too many of them don't. It's pretty crazy out there how many might have a CPA on the side, but nobody in-house. They rarely have a CFO or some kind of financial advisor on the board. It's pretty wild out there.
It is. We see it all the time, unfortunately.
So number 5 is to seek advice before transferring assets from a troubled entity. So just like we're talking about, have a financial advisor so you can ask these questions to. If you transfer of assets when a company is insolvent, it can be unwound by your creditors as a fraudulent transfer or a shift liability to officers and directors under theories of breaches of fiduciary duty. So you don't want to do anything illegal, like, sell the company, for example, without telling the investors, something shady like that.
Nobody would ever do that,
No,
would they?
it's never happened before. We've never seen that.
Never in my life. But this gets to the earlier point of having legal advice and having financial advice. While it can seem like an answer to all your problems just to sell the entire company or the significant assets of the company to get you out of trouble today, there are ramifications as a result of that, and it can result in personal liability. So be careful.
All right. So halfway through the 10 tips that businesses should follow during an economic crisis, pay your taxes and employee wages. So that's kind of all around. And there's a lot of people who don't. One of the big companies in Portland that I used to always go to wasn't paying their taxes and employee wages. Or employee taxes for wages. But it's not that hard. And I think we've seen a few companies in Washington do this same thing. There's no excuse.
There is absolutely no excuse for this. If you are not paying your taxes and you are not paying your employees legitimately earned wages, you are in deep doo-doo. Deep doo-doo. Talk about who to pay first. You had better be paying your employees first. You have exposure up to treble damages for unpaid wages in the state of Washington. And taxes, if you don't pay your taxes and the company goes down, you now owe those taxes. They don't go away. They do not go away. So please pay your employees and pay your taxes.
Yeah, we've seen a few brands in Washington not pay taxes, and investors came in, found out, obviously, because government wants their money. And again, there's no excuse for not paying those taxes. So it's not really worth losing the whole brand just because you want more profit. And if it wasn't profitable enough, then you really kind of need to go back to these 10 tips and make sure that you are a going concern, that you can even remain in business. Otherwise, you're just kind of robbing Peter to pay Paul.
Agreed.
All right, number 7 is respect corporate boundaries and update corporate records. So compliance is going to be huge in this industry eventually, and I don't think anybody is really ready for the man hours and the level of organization that compliance truly has, especially at the level of an IPO. At 40 cents, some of these penny stocks trading at 40 cents, it's literally not worth being public for because compliance is too hard. So if you're going to have records and everything that at a professional level, it's going to cost some money and some organization.
I have personally been involved with some of my own investments that want to grow due to a huge, big corporate influx of venture capital or IPOs or growth, acquiring another company or being acquired. Once you start hitting the big bucks, wherever those big bucks are coming from, they want to see the corporate records. And if you don't have the corporate records in order, it can be a real pain in the patootie to go back to fix the corporate records. And you're not going to find a receipt for an invoice or something from 2017 to justify that $10,000 expense that at the time you thought was fine, but now you can't justify. So keep the corporate records in order. And if you are driving around in a Lamborghini when you are a Washington producer processor who is barely scraping by, red flag, red flag, red flag, red flag. And it happens all the time. I got $1 million investment. Now I have a Lamborghini. Yeah, right.
But in addition to maintaining those records, you also want to maintain financial records. Anytime a discrepancy comes up, You want to make sure that you can resolve that. Having worked at Capital One's brokerage firm that's now part of E-Trade, we had Ernst & Young in there for a week. And so one of the top 3 or top 4 accountant firms, they are very, very diligent at what they do. And so it was always a pain in the ass for the 6 years I worked there, being the sort of liaison to them, the bridge between operations and finance, and making sure everything was compliant. Was a pain in the ass. And so even having meticulous records, you want to make sure that it's really, really organized. Otherwise, you're going to be spending a ton of money either in fines or just paying somebody to find a piece of paper in a huge hill.
This day and age where your receipts are in a box under your desk is inexcusable. This is a highly regulated industry. Now, granted, it's not mature enough for IRS audits or state level tax audits, but they are coming and they go back years. I cannot stress enough. Josh, you mentioned compliance. It's just imperative that you have all business records, employment records, corporate records, finance records. You just need to know the state of the business, and you need to prove how you got there. It's imperative. And unfortunately, even now, we are still seeing it where the records just don't make any sense.
Yeah, stay compliant so you can keep your license. We know of a few people that didn't really do that, and they've lost their license, and it's unfortunate because I don't know if there's a moratorium, but they're definitely not issuing new licenses right now. Ongoing rates, I think in Washington, what would you say, about $25,000 for a producer processor license, and maybe 6 figures for a retail license, depending on the location?
Agreed. You risk losing the most important asset you have, your license. Without the license, you can't sell cannabis, and it's a crying shame when people think about these things after the fact, and then they scramble to get everything in order. And you might be a 100% legitimate business and not doing anything wrong. Unfortunately, you have to prove it.
And people are going to be really desperate right now. There's a lot of investors and just kind of vultures out there. And so one of the top 10 tips, this being number 9, says that transfers of licenses in distressed situations need to be carefully considered. The timing of transfers and coordinating the regulatory approvals necessary to maximize their value can be key to a financial turnaround.
In the state of Washington, if you want to sell your cannabis regulated I-502 license, it needs to be approved ahead of time. You cannot transfer funds until after you have received approval. Now, if there are unanticipated delays due to various situations, you still have to wait. So, hey, your business is struggling and completely above board, completely legit. Somebody comes in and wants to buy your business. You are looking at 3 to 6 months in order to have government approval under the best of times. Be smart and don't do crazy things just because of a somewhat temporary situation.
And number 10 on the top 10 list of tips that cannabis businesses should consider during a epidemic or even an economic crisis is know what's latest on this pandemic. Know what's going on. You can see that Marijuana Venture, they're talking about this epidemic and what it means for federal payroll and tax credits, the reliefs available for cannabis companies. I want to check into that, as well as what's happening with the CARES Act, some other options within this whole thing. And then sales too, like what's happening. What are the flavors? So Brightfield Group has got an interesting and their Twitter feed about the flavors that are selling right now, the days of the week. And so Headset has a report on cannabis consumers in this time of crisis and what they're buying and when they're buying. And so it's really interesting that weekdays are now higher sales than weekends, and everything is changing. So definitely when they say to know what's latest on this whole epidemic, know what's going on, because it's going to be changing inventory and purchasing decisions from here on out, how they buy and what they buy, how much they buy, everything.
Absolutely. I think last week's podcast, we talked about the change in buying in some states compared to others as a result of the current situation. And you can capitalize on that, or you can miss out on that vote. So certainly know what you're talking about. And then the last piece, there's various programs available during this time. And if you take advantage of one of these programs, if you're lucky enough to be selected for one of these programs, make sure you consult with your tax and legal professional, hopefully who you can just pick up and call, because you might end up slipping or making a misstep, which could cause financial or regulatory harm to the business. For example, in the state of Washington, any financial investment needs to be reported to the LCB, the Liquor and Cannabis Board. There is a question of whether some of these stimulus programs have tax ramifications, especially if it's forgiven, or if it is considered a financial investment or grant or financial implications with the LCB, because you're getting money that you can't necessarily track back. There's no investor behind that. Is the federal government a financial party in interest in your business now that they've loaned money? You should know these things before you're like, yay, I got lucky and won the lottery. Did you? It's interesting.
And just like bringing a coupon into a store, you can only have one coupon or whatever, right? So
Yeah.
with these, you want to check with a professional, because sometimes you can only have one of these benefits. So you want to make sure you're picking the right one for your situation, not really listening to a podcast or a friend or family member tell you what to do, but a professional, because again, it's going to be unique to your situation.
Certainly. And for example, just this simple thing, Washington regulates the influx of cash into a cannabis business much differently than in California. So the answer to the risk question is probably different in Washington than it is in California.
Yeah, no doubt. Everything's different. So to find out what's going to be moving forward, come back to the Talking Hedge. And with that, we're going to roll this one up. I want to thank my guest, Katrina Glogowski, angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe. Or don't. And I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.